Here, I want to do a very quick, a second educational video on gap ups and volatility. So this one will only be on the stock WATT. News came out on whatever day this is. This is the 27th of December. Some technology information on rechargeable batteries or something. So um, one part of the strategy, which is worth considering on from a trading perspective, is just trading volatility. So there are many services and products out there that you can subscribe to, or we could probably do our own scan of stocks that gap up or stocks that gap down greater than X percent. I don't know, maybe 5% or something, because we want to, like I said in the other video, we want to trade things with volatility. If it's not making us money, we don't want to be in it. It's just boring. So that being said, let's take a look at Watt here. I think this is, let's blow this up a little bit. Okay. So ironically enough, this is a reversal on the month. So I'll show some examples of this over time, but weirdly, the strategy, the price in the strategy plays into news related events very, very well. So a reversal strategy of the month that takes it out above $10. So here above $10 is when the reversal monthly kicks in. Now the way you would trade that is strictly pre-market, and I don't have pre-market hours here. I wonder if I can pull that up real quick. Let's see if I can do this very quickly. Come on, 1 hour equities. Okay, so it goes above $10 pre-market. I don't know what time this is. 4 o'clock in the morning, I guess. Um, and it takes it out $10, and you'd have to probably find a smaller time frame. But on the hour, you're green on the hour. At that point, when it takes it out about $10, you're green on the 60, obviously on the day, on the weekend, the month. Pretty simple in the time frame piece. And no, most of the time with these gaps, you will be either full time frame continuity, which is hour, day, week, and month, or if you're not, you have probably had some extreme volatility to the point where you had a huge run up and then bad news comes out and you're in the middle of the opposite signal where it's like a shooting star or something. So in this instance, we have full time frame continuity on all time frames. That's a plus. Obviously, in all this pre-market action, you'd have to just get in at $10 or find a smaller time frame. Which let's just see for this is gonna be too much of a pain. So we'll come back to that later. But um, so that's kind of the first piece of how you want to look at it. And this would be, in the overall scan, which I think we'll probably have, right, is what's the time frame analysis of this stock. So clearly everything's full time frame continuity. That's on the buy list, right? So how do we get into a stock like this, and how do we trade the volatility? The hardest thing for traders is like, when do I get in and when do I get out of volatility? So here we have the gap up. The first hour is just kind of a sell off here, not much, considering the move that it made. And then we have a inside 60-minute shooting star. All right, so this is a very potent sell signal, right? So at this point, we opened up here 1735. We are lower for the day, which is important because a lot of times, like I said in the other video, gap ups kind of tend to reverse. So it's important to watch the direction from where we traded in the opening, and maybe sometimes, and not as much the longer term time frames, because volatility, the shorter time frames matter. So here we actually look like we're going to sell off, but then in the third hour we go inside 60. So this basically negates the inside 60-minute shooting star, because if this is going to hit, this is going to happen. Like, we're going to take it out the next time frame, no doubt, right? So if it's really high volatility, inside, down, and then we're good, right? So it goes inside 60-minute, inside in the hour. So it's some part of the algorithm we want to have this conditionality, basically, where if we take the inside 60 and up, can we take the day green at the same time, right? So here we do. The high here is 117.5 and the open is 1735. So in this hour, this does take out the opening of the day and turns the day green. So inside 60 up takes the day green, and once that happens, we're off to the races. So this is our buy signal right here. Full time frame continuity inside 60 up, and our stop is at the low of this bar. Take it off. Um, so so that's the entry point for that. If we only want to trade, the 60-minute charts. So let's break this down a little bit to smaller time frames, um, and see what it's like intraday. So here's what we got on the 30 minute. So we would have gotten long here probably, and there's also this 30-minute hammer to to reinforce that 60 and up. So we're long around 1625, takes a day green, and we don't have a single red 30-minute sell signal. So so we've got an option here, if we're going to trade a strategy like this, is do we automatically sell some of the position, at the close, basically, and say sell at the close, whatever the price is, 15 minutes before, 10 minutes, like at 3 minutes before, whatever. That's something we'll have to discuss, if we don't have any sell signals, because when we have news like this, we don't want to just leave it all on the table. So let's say we hypothetically sell half at the close. Okay, but then we have this conditionality that says, okay, we'll sell half at the close, but from there we'll sell the rest of it at any 30-minute signal. So we close the day here, and then the conditional piece of the algorithm would say, okay, so we sold half, we booked some profit. From there, we either have a stop at even, right, which is our long price down here, or we sell at any 30-minute sell signal. So let's say we take the latter, any 30-minute sell signal. So we gap up again. We go inside 30. Let's see if I can get this. Sorry, this is a little sloppy here. So I could take this off. Okay. And here's a 60-minute chart that we just looked at. So we're long from down here. So let's say we take the sell signal side of the 30-minute chart, and we say, all right, any sell signal on the 30, we'll go ahead and take that. We gap up, we go inside 30, inside 30 and up, reversal 30 because we close back within the range. So here's a potential sell signal, reversal 30. At this time, we are inside 60. So small sidestep here. When you're inside bar here on the 60, or inside bar in general, we start to see a lot of reversals, because what inside bars are basically is very small moves to the upside and downside that don't take out any sort of range. So we're sitting in this inside range here, very tight range, doing nothing, and just traders are just squabbling over pennies because it's not moving anywhere. And what you'll see from price is this: inside and up on the 30, back down, sell signal. Doesn't really mean as much because we're inside on the 60. So I know it's kind of a lot of information there, but we can go back over that in more detail. So inside 60, 60 goes up back to the highs. 30 negates the reversal, goes back to the highs. We make a slight higher high up here, come back down. So no real sell signal yet. I don't know if this would trigger a shooting star. You have to run the numbers on that. Let's say that it doesn't. Um, okay, let's say that it doesn't. So then we have, this comes back down, no signal here. Inside 30 here at 1:30 in the afternoon. Inside 30 and down would be our final sell signal. That's definitely a shooting star here. Boom. So we're out inside 30, shooting star. We sell the remainder here at the low of this 30, which is $30, $30.87. Not too bad if we sell at 30.87 if we are long from 16.50. A nice $14 move in about 6 hours of trading. If we would have went with the 60-minute sell signal, we would have been out the next day here inside 60 down to open the day, on, I believe this would be Wednesday. So basically the same thing here. So yeah, so that's how we would do some intraday stuff. Like I said in one of the messages earlier last week, it's just kind of how do we want to define these things. It's just going to be a set of rules basically, and we need to kind of figure that out. I can put together a spreadsheet, but let's have that discussion because And I think clearly this provides us pretty good criteria for what we want to do to get in and out of position. So, and also, something to keep in mind, it's related to this strategy as well as anything else. We should always have some criteria in place. So we should always have a stop at even, I think, if nothing else, right? That should be an overriding thing. If there's something in the algorithm that we don't catch, like if it doesn't catch some gap down, that's going to be another rule. So we have our stop at even at all times if we're maintaining the gain. Um, if we are long a position and it gaps down and we're at a loss at the open, we need to figure out the criteria for that, whether we sell at the open or we sell at the first 15-minute sell signal that reinforces the gap down, something like that, and keep that in mind. So yes, I think hopefully that helps a little bit. I know it's a little bit scattered. I apologize, but I think that'll provide some detail on both strategies. The first video on the longer term stuff, and then this is the second video on the short term stuff.